Samsung, for instance, is up 3.5% as we speak.
Paints business, you already have a very strong incumbent who's been there for many years, who we respect very much. Our ambition is to be the second largest.
On an annualized basis, I think the research reports that all of us are getting show that there'll be about 22 to 24%, and I think there is still a lot of growth left in the commercial vehicle industry.
Still remain committed to our $525 per ton guidance that we gave.
On expected lines, the Nifty is up 30 points, sensex is up 45 points.
Overall, for the year as a whole for FY23, our earnings expectations for the Nifty are about 11%.
Demand continues to be very strong and robust for our products. We've done very well in the SUV space.
Flat on the benchmark indices, the mid-caps too, trading absolutely flat.
India right now is the second largest market in terms of engagement on LinkedIn. We have roughly 97 million members.
Prasanji has a very large presence and will continue to do so because markets are pointing towards the highest number of sales taking place in the mid-mass to aspirational segment.
Single-digit WPI figure coming in at around 8.4%.
Nifty is up 8 points. It has recovered from the lows, but nevertheless, it is in that consolidated range.
Well, that was the day so far. You're with us here on a new edition of Closing Bell. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi. Good afternoon. It's an absolutely quiet day so far, isn't it? The market not doing very much at all on the Nifty. Actually, you know, the mid-cap and the small-cap indices are doing only slightly better. So there is not too much to take away at all from today's session. Very stock-specific. Metals, IT, real estate, if you want to bunch stocks together, these are the three groupings which are still doing a little better. FMCG and PSU banks are seeing some pullbacks. And banks, the bank Nifty, the immediate high, which was made on Friday, that becomes kind of a reference point. The Nifty, of course, made a high and then sold off in the middle of the range. And of course, I mean, the big one is going to be for the Nifty, the all-time high, which is still about 250 odd points from where we are. Just a couple of things. You have a regional Fed president who's, I mean, he's become one of the first members after the consumer price inflation data last week out of the US to caution against placing too much importance on one CPI print. That is the statement. And, you know, I said this in the morning, you will hear from many out there over the next 2 weeks or so. This week, there are 14 Fed speakers. And some will push back on the idea that inflation is, you know, coming off. Others will say, well, Fed needs to be cautious. And all of it, not all of it, but a lot of it could be price sensitive, given how much the market is hooked on to what the Fed will do or will not do. So it's all about perception, and we'll get a fair bit of perception from Fed speakers all through this week. Rima, hi.
Hi, so three big sectors today, right? One of them is metals, as you pointed out. The Nifty Metal Index is up 2%. One of the drivers has been the sharp decline in the dollar index. The dollar index high in October was 114.75. Right now, we're 7% lower than that at 106.7. So that's driving IT. That's driving the metal stocks. The second one is the IT index. Nifty IT index is up 1%. Tracking the gains following, you know, seeing that rub-off impact of that monster 8% rally that we had on NASDAQ last week. NASDAQ last week was up 8.1%, and that's fueling the rally that we are seeing in Indian IT today. And thirdly, the Nifty Bank. Pull up the intraday chart of the Nifty Bank, and you would see a near 200-point recovery on the Nifty Bank from the day's low. And particularly, names like HDFC Limited as well as HDFC Bank. These are the stocks. Again, see the intraday chart and you would see buying coming through in these two heavyweights in the last 2 hours or so. On Friday, these were stocks which are up 6-7%. There was a lot of talk about how perhaps it's the start of HDFC Twins recovering some of their recent underperformance of the last 1-2 years. And today you are seeing follow-on buying in both HDFC Limited as well as HDFC Bank. Again, compared to an ICICI Bank today is down 1%. So that outperformance persists for the HDFC Twins, and they are the private banks, Nigel, which are outperforming today. Hi.
Well, that's right. Hi, Rima. Hi, Prashant. You know, not a bad day, right? Some kind of consolidation, as we said earlier today. It's par for the course. The Nifty hasn't moved much, but you know, that's the case, and that's pretty okay because the kind of run that we've seen. Remember, we had a stellar run on Friday, so maybe pausing for some breath isn't such a bad thing. I'm looking at a couple of strikes actually today. The 18,400 call. Now, that's the most active strike today. and the premium out there has come down out there. Now, just keep an eye out on that market. It appears there are signs of writing, and as we mentioned earlier today as well, it seems the bears, they have shifted their goalposts from defending the 18,350 to around 18,550, and that's perfectly tying in with this 18,400 call out there. On the downside, though, the 18,300 put as well is seeing some writing. So that's telling you that the bulls, they're making a case where that base from the market from around 17,850 moves to around 18,000. Now they're trying to trend that higher as well. So keep an eye out on both those two strikes. But I think the next level of resistance, everyone's talking about those fresh all-time highs in that vicinity of around 18,550 to around 18,600. I'm expecting a bit of a fight going by the options data. Rima.
Okay, that's how the market looks set up right now. Let's take our viewers through what we've lined up for them on closing bell today. Bharat Forge is under pressure on the back of a mixed set of Q2 numbers. Baba Kalyani, Chairman and Managing Director of the company, will be joining us in just a bit to discuss the numbers and the outlook going ahead. Pharma stocks like Aurobindo Pharma and MedPlus are buzzing on the back of their quarterly numbers, while fresh litigation over Revlimid casts a shadow on drug maker Natco. More details on these pharmaceutical names on closing bell. Sun TV, Info Edge are also reacting to their quarterly numbers, complete earnings fine print on the show later today. And finally, we'll be joined by Mithun Aswath, Managing Partner at Kiva Advisors, to discuss all things market and valuation. All this and much more in the next 60 minutes.
Well, how should you position yourself in the next 60 minutes of trade? What are the trades that you can take and which ones you should avoid? Mitesh is joining us for exactly that. Mitesh, hi, good afternoon. What do you have on the Nifty and then your trades?
Afternoon, Prashant. The indexes had a very quiet day, but we maintain the view that the setup is positive. I highlighted the fact that last week's closing was the highest weekly closing which the Nifty ever recorded, though the daily closing is about 18,477, and we haven't cleared that. That remains a supply pivot. But I think overall it's a market which, unless until it starts breaking below 18,100, 120, will be very clearly looking at scaling further highs. And 18,477, 500, I think once that is taken out, then I think some more strong momentum may also come in. So stay positive. On the stock side, Ashok Leyland is something which is after a few days of correction and then a consolidation is breaking out. So that's a buy. Keep a stop below 150 here. Look for targets of 160 to begin with. And the other one which I like is Tech Mahindra, and I've been bullish on IT names. This is another IT stock on the recommendation side. That's a buy with the stop below 1,055 for targets of 1,100.
Mitesh, thank you very much for that. We'll connect with you later on in the show. Let's invite Baba Kalyani, the Chairman and Managing Director of Bharat Forge, on the show. Bharat Forge reported their Q2 numbers. Standalone revenues at 16% has come in ahead of street expectation, but margins have declined. Margins are lower by 590 basis points on a year-on-year basis at 24.3%, and that's disappointed the street a tad bit. Afternoon, sir, and thanks so much for joining in. This is Rima here. First, if you could tell us what led to the margin decline that we're seeing year-on-year as well as on a quarter-on-quarter basis, and should we expect more margin pressure?
Well, I think, the margin decline is largely a factor of inflationary effect. If you remove the inflation, the decline in margin is just about 40 basis points. So the steel prices have gone up, so the sale price goes up, and then your margins come down as a percentage. So we don't see any margin decline. There's a small margin decline, largely because of our military vehicles that we supplied in the quarter, and we have some LD payments that are likely to be restored back once the orders are finished. But apart from that, we don't see any big problem on margins.
Okay, no big problem on margins. Dr. Kalyani, this is Sonia here, and thanks for being with us on the show. I wanted to also ask you a little bit about the overseas subsidiaries, because I noticed in your presentation that the overseas subsidiaries have posted a loss this quarter, both on an EBITDA as well as on a PBT level. What led to that, and when do you think you can get back into the black?
Oh, the real problem is in Germany. Germany is facing some acute inflationary issues on energy and other inflationary pressures, and a lot of disruption in supply chains, and I think that is what has impacted our business. We had geared up for higher production and therefore had higher manpower in place, and that didn't happen. I think it will take another 2 quarters and we will be back to where we were. We have had a fairly good record on our German aluminum business. Ever since inception, it's never made a loss. This is the first quarter that it's ever made a loss, and I think we have taken some corrective actions. Hopefully, it will be all right in 2 quarters.
Is it the reason why your debt has gone up as well? Because I noticed the long-term debt has inched up to about 2,500 crores plus from 2,300 crores earlier. Do you see more pressure on your debt because of what's happening with the overseas subsidiaries?
No. Debt has gone up largely because we borrowed money to buy a company called JS Auto in Coimbatore, which is a new industrial business that we have got into. And I think that business is already generating a bottom line, and it's going to grow quite rapidly. So you will see the results of that business growth and coming in the next 1 or 2 quarters. It's anyway profitable even now.
Mr. Kalyani, hi, good afternoon. Prashant here. In the first half, H1, sir, reported EBITDA is at about 890 crores, which is about 1.5% growth compared to H1 of FY22. Could you tell us what should we expect in the second half of this year? What kind of trends are you seeing already in the third quarter, and for the next two, for this quarter and the next, on an overall basis, what should we see?
I think overall the business is pretty strong, what we see. So hopefully the EBITDA also would remain pretty good going forward. I think 2 or 3 things that will keep happening. One is our industrial business will start growing because of the acquisitions that we have made, and we see a lot of traction happening there. Our existing business, we have got huge number of new orders, so that will also start growing. So, and our defense business will show some growth. So all the areas we expect to see some growth. So I would say our second half should be pretty good, a little better than the first half.
Hi, Mr. Kalyani. If you could give us a number then, if second half is going to be better, what will the tonnage look like for the second half of the year? I think currently you're going at a run rate of around 65,000, 63,000 or thereabouts. Second half, do we see that number scale up gradually to around 70,000, you think so?
I can't give you exact number of what the tonnage will
it be better than quarter 2?
Yeah, but I suspect it will be better, yes.
Could we see 10% higher?
I don't know.
Sir, I just wanted, you briefly mentioned that the debt of the company has gone up because of the recent acquisitions. There's JS Auto and there's Sanghvi Forgings as well. Can you give us an update on how those two are doing, and what kind of contribution do you see to your own business?
Both businesses are making money. They are delivering the results as per plan. We expect the JS Auto business in the next, let's say, by 2025 to reach about 1,500 crores.
Okay.
And the Sanghvi, the one in Baroda, is already at, we hope it will get to about 200, 250 crores by that time. But both are profitable right now. Both are generating cash flows. So things are quite well.
All right. Thanks very much, Mr. Kalyani. Appreciate you joining in and running us through that outlook. So H2 should be better. Of course, no numbers right there, but triggers, as Mr. Kalyani explained, should help business going forward. 857, 858, the stock's down about 3.25% or so. It's come up after the dip we saw immediately post the numbers. Well, 0.5% change on the Nifty. So this is one of the flattest days we've had in a long time. Now, pharma companies, pharma-specific stocks are in focus on the back of second quarter earnings, and there are some news updates with individual names as well. Ekta is here with a roundup of all of that. Ekta, over to you.
Thanks. I'll start with Aurobindo, which is in focus because there was a steep amount of price erosion which took place, which resulted in the US business underperforming. So the company did say that oral solids have seen a lot of price competition. The guidance for sales when it came to the injectables has also been reduced to 650 versus 650, $700 million in FY25 versus FY24. And there was a lot of corporate governance questions and issues which were brought up in the conference call as well by some investors. So, for example, Mr. Sarath Reddy, who has been involved in this controversy in the past few days, they said was looking after IT logistics, and his responsibilities will be reallocated. He will be a non-executive director going forward on Aurobindo, and to the best of Aurobindo's knowledge, no other director is involved in any kind of business outside of Aurobindo. Now, a couple of other companies which were in focus was MedPlus, which in fact reacted very positively to what was the conference call takeaways. For example, they said that they saw a net addition of around 348 odd stores. They are exploring the opportunity of entering 3 new states as well. And separately, they are participating in the Axis Capital Rising Stars conference today. So maybe there's added momentum on account of it. Credit Suisse has upgraded the stock to outperform from neutral. They like the maturing store network. They maintain that maintaining their current level of discounting. And the likes of Nomura has reaffirmed their buy on the stock as well. Lastly, Dr. Reddy's, Natco, Zydus, Sun, all of these stocks are in focus on account of Walgreens in the US, in fact, filing a litigation against the likes of BMS, Bristol Myers Squibb, as well as Natco and Teva. Bristol Myers Squibb is the patent holder or the innovator of the drug Revlimid generic, the cancer drug Revlimid generic. Natco as well as Teva were partners to launch the first generic version of this particular drug. So Walgreens has filed a suit on these 3 companies for this particular drug, and hence the spillover effect is seen on the likes of Dr. Reddy's, which has exclusivity on 2 of the strengths for this drug, and hence there's an expectation there could be a spillover impact on a lot of the other companies.
Okay, all right. Thanks a lot for that, Ekta. Well, Deepak Shenoy as well is joining in. Hi, Deepak. Good afternoon. What do you make of these companies? Ekta discussed a few of them. How do you approach the pharma theme, basically? You know, there are 3 broad ways of looking at it. Core pharma players, you have the diagnostic companies or the hospital companies. What's your pick from there?
I think among the 3, Nigel, to be honest, the hospital players look relatively the most exciting. And I don't say this because this is a generic statement. I think right now, pharma players are going to get hit for a while more. And there is another round of activity from the FDA that will be expected towards the middle of next year. So I think a little bit of headwinds over there for the next 1 year or 2 years. I'm also expecting some, of the API players here to face both competition and a situation of reopening from China from March onwards, where some of the business that came in during this time may actually get spread out. But hospital business in general in India, I think, seems to be picking up. Some of the hospital businesses, especially like Narayan, Vidyalaya and all that, are actually priced very well, even though they're at relative highs. I think the potential to grow from here is quite high. Plus, there's a certain acceptance now of relatively higher costs of medical care, especially emergency medical care. So I think that will serve them well in terms of a business outcome in the longer term. But we have to understand that the hospital business is, a tremendous amount of cash changes hands. So therefore, all the benefits may not accrue to shareholders. Just a caveat to keep in mind when you look at hospital stocks.
Deepak, hi. Afternoon. Very, very stock specific. And I mean, we can say the Nifty is flat, but it would be unfair to describe the market as being flat because so much is up and down big time. Fortis, Deepak, I don't know if you have any thoughts. The low was 250 after the Supreme Court order, which didn't go as many were expecting. The stock's back above 300 today. It's an 8% move. I don't know if there's any news flow per se, but if you have a view.
Oh, no, we don't actually. I mean, we've been waiting for the whole court saga to get over. And honestly, I haven't seen seen much of it recently. I think, again, this is one of those stocks where there is so much that has happened in the past that just unraveling that will cause damage. So I'd rather choose some of the relatively less complicated hospital stocks. But yeah, I mean, I honestly don't know what's happening right now. Why is it up 8%? No idea.
Deepak, afternoon. Rima here. Any thoughts on the real estate player Keystone, which is open for subscription today, which sells under the brand name of Rustamji? Since real estate stocks are doing well, we are all saying that real estate is in an upcycle. Is this an IPO one should subscribe to?
So we don't have an IPO call on this yet. In fact, I haven't seen the numbers. But in general, I would say the real estate space I think the reason why it's exciting is because I think prices of real estate have gone up. This does not necessarily mean a good thing for the builders. In fact, nothing seems to be a good thing for builders. If the prices go up, the stocks don't do well. If the prices go down, also the stocks tend to not do well. So there'll be pockets of performance. I think this is one of those pockets right now. I think you might see a sustained interest in the space for another 6 or 7 months. But as interest rates increase, affordability decreases, and if the higher end of the bargain, now I'm not talking about lower end players. Lower end players will continue to make money, but the higher end is where I think there's competition, and the affordability hit is it's quite dangerous over there. So much as I say that this could be a 6 to 8 month kind of short term play, I think you would be you'd be negatively surprised if you hold these stocks from here longer term. And I speak of the whole real estate pack. I think it's an opportunistic short term play, but not really long term.
All right, Deepak, stay with us. What we'll do is we'll take that quick commercial break here with the news that the market on the Nifty is not doing very much. We'll also have Mithun Aswath, managing partner at Kiva Advisors, joining in. Stay tuned for that.
Welcome back. Well, the markets are moving around, but in that band of around 20 to around 30 points odd. HDFC, that's the big boy in there. That's slipped a little bit in the last few minutes. And remember, that's the large weight. So because that's come off the high point of the day, it's put some pressure. And HDFC Bank as well. Remember, both those two, they were the big gainers in Friday's trading session. Bulk of the gains came from them. And they've come off a little bit. That explains why the Nifty has moved into the red. But talking about the broader markets then, Sun TV, well, that's losing out in trade after posting a weaker set of numbers. Vahishta standing by to run us through a quick analysis on that. Vahishta, over to you.
Thanks for that, Nigel. Well, Sun TV has been sulking in trade today, and the results were declared on last Friday post-market hours. When the revenues have declined 3%, the street was expecting upwards of 900 crores, when the actuals have come in at approximately 220 crores. The growth was dragged due to weak advertisement environment, which came in at 340 crores. Now, remember, the advertising environment as a whole has been subdued, which was also highlighted by Zee in their Q2 results, which were out last week. The subscription revenues for Sun TV fell due to a pricing embargo, which was ahead of the implementation of the new tariff order 2.0. Sun TV's margins, though, were stable at about 65.1%, and the company has 4,000 crores of cash on their balance sheet. They announced a dividend of 3.75 rupees per share, and hence there is scope to not only sustain but also raise the quarterly dividend, considering the strong cash generation and the large cash that they have on their balance sheet. The UBS has a target price on the stock of 600 rupees. Back to you.
Okay, thanks a lot for that, Vahishta. Deepak, what do you think about this one? Value or value trap? Forever we have been talking about the cash in their books, their IPL investment, but the core business is not firing. What's your sense?
Sorry, which company was this?
Sun TV.
Sun TV. Oh, yeah. It's a political play, I think. The problem with that is that it's a 75% owned by promoter stock, so it's not like there's a lot of liquidity, but then there's so much that changes for the business based on some political alignment of X versus Y, and then you can't give it any kind of a premium for the fact that it's one of the few profit-making companies in this space. I think you would expect that you'd get a higher premium for that, and for the for what they are for their masses, which is almost very difficult to beat. But I think the problem here is entirely that because of the political, you treat them like a PSU because you don't know what will happen from the promoter side of things.
All right, fair enough. We'll leave it there. Thank you very much, Deepak, for joining us with that opinion and views. Appreciated, as always, your views. Well, InfoEdge is the other one. I think, Friday was a big day, some 5-6% gains. Today, it's up another 6%. We had the management with us, InfoEdge, and, they sounded confident, although they are saying, Rima, that IT services, IT hiring will slow down. I mean, this is something they said last time also, and they kind of reiterated, but other businesses are doing well.
And in fact, when you asked him that which are the other businesses, he named all the sectors, right? It was travel, tourism, hospitality, realty, telecom, healthcare. He
financial services.
So all the sectors were named. But that is about 35% of the overall recruitment business. Historically, it would have been close to 50%. But because IT started doing so well, the contribution of IT hiring to Naukri's revenues went up to about 65%. But I guess that will now balance out. So on the whole, if, one slows down, the other engine appears to be picking up and firing, and that's the expectation, at least, from the management. A quick run-through of the InfoEdge numbers. Strong top-line growth, 50% plus for the fourth consecutive quarter this time. Margins have expanded quarter-on-quarter and on a year-on-year basis. Margins stand at 34.5%. One of the reasons for the margin expansion is their ad spend as a percentage of their revenue has come down to about 15.5%. This was even more than 20% a couple of quarters ago. So that's been one of the drivers for the margin expansion. And in that, it's it's the change in strategy at Jeevan Sathi, which is helping the company bring down its ad spend. So basically what they're doing in Jeevan Sathi, earlier it was a paid service. Yeah. Now they're trying with this whole freemium model. So a lot of the services, the initial ones are free. So that's helping the company get a lot of subscribers and traction. So they do not have to spend so much on their ads. So what's happened is the ad spends are coming down, boosting the revenues, but the Jeevan Sathi revenues itself have come down in Q1 and they came down in Q2 as well because the services have now become free. Naukri is the big driver and that continues to fire for the company. 60% revenue growth plus and 60% EBITDA margins. So that's the extent of the operating leverage the company enjoys in their Naukri business. So that's about InfoEdge.
Well, interesting. Lots of businesses there in that one company and something or the other working for InfoEdge. I mean, it's doing very well. Now, my colleague Vivek has gone through some data on how mutual funds have been rejigging their portfolio in the month of October. Which stocks are in, which stocks are out, all of that. Vivek, tell us more.
Well, that's right. So in the month of October, it was interesting to see the kind of activity that fund managers have done. And what we've done is we've actually isolated these into three buckets, the large cap, mid cap and small cap. And looking at the data, we've also got help from this data from Nuvama Alternative Research. So this data, the key large cap additions across mutual funds as far as, the month of October is concerned, IndusInd Bank, Reliance Industries and Infosys are the three stocks that have seen the most additions. While on the other hand, if you're talking about some of the stocks that have seen mutual fund managers actually trimming their positions, it's actually been Axis Bank, Coal India, Bharti Airtel as well as HCL Technologies. On the other hand, when you're coming to the mid-cap space, Tata Chemicals, Z Entertainment, Gland Pharma, despite the kind of fall that the stock has seen, and Delivery, the new age company that actually saw quite a bit of a market cap erosion. These are the stocks that have actually seen quite a bit of fund inflows from domestic mutual funds. And on the other hand, what's seen trimming across the space is NMDC, Voltas, Federal Bank as well as IGL. These are the stocks that have seen quite a bit of selling from mutual funds. Now remember, 10,000 crore to 40,000 crore is how we define the mid cap space. And come to the small cap space, RBL Bank, EMIL, latest listing, Karur Vysya Bank are the top additions. While on the other hand, what's actually seen a bit of trimming or selling is actually RITES, Welspun Corp, Metropolis Healthcare and Indiabulls Real Estate. These are the stocks that I've seen selling as far as the mutual fund managers are concerned.
All right, Vivek, thanks very much. Appreciate you joining in with that. So those are some changes at an institutional fund level. Mithun Aswath is managing partner at Kiva Advisors. He's joining us. Mithun, good to have you with us here. Thank you very much. Are we in for a bit of a phase of consolidation here, Mithun? Or you think the rally continues? Because globally things have improved a little bit. Financial conditions have eased, yields have dropped, dollar is down, equities are up. But how much of that will sort of continue to show up in a big way here? Your thoughts?
Yeah, good afternoon, Prashant. I think over the last few weeks, you actually saw, there's been a little bit of a catch-up in terms of the global equities as well. Otherwise, India was, a excellent outperformer over the last 1 year. I think the Nifty is up about 4%, while, say, the S&P 500 is still down 16%, while the NASDAQ is down 25%. But over the last 1 month, you've seen global equities catch up since they had been beaten down significantly. And we may also be towards the end of the rate hiking cycle of the Fed. The recent CPI number for October came in better than expected. And you saw a risk-on rally emanate post that. So we could continue to see more of the same as long as inflation is remain in the same range. You may see some of these money move towards, those sectors which were beaten down in the US, primarily technology stocks. Even in the US, some of these technology stocks, especially the large caps, have come to quite attractive valuations and are way off their heady levels which we saw last year. So there will definitely be interest in those pockets. While in India, I think we may more tread water, and our markets have been held up because of FII flows over the last 2-3 weeks.
Okay. All right. Hi, Mithun. Good afternoon. Thanks so much for joining in. Mithun, I believe you're still positive on the hospitality sector. And you have a couple of stocks as well that you're tracking in there. First, tell us about the theme and then run us through the stocks that you're positive on.
Yeah, Nigel, I think we've seen, the hospitality sector quarter on quarter improve as COVID dissipated. It can be seen in the numbers of, the hotels, a lot of the, the airlines, all the prices have moved up. But we've played it over the last few quarters through a couple of companies. One is a company called Thomas Cook, which is primarily a travel agent business, as well as they have three other businesses, which is foreign exchange. They own the Sterling Holiday Resorts, and they have digital imaging solutions as their fourth business. We are quite positive on this company, primarily because during COVID, obviously, they were making quite a lot of losses. Now, 2 out of their 4 businesses have reached pre-pandemic levels in terms of scale. The other 2 businesses, which is Forex and travel-related services, are expected to go back to pre-pandemic levels over the next couple of quarters. And FY24 should be a year where, they go back to normalcy and go back even beyond pre-pandemic levels. So that is a company that we like. It is debt-free. It's promoted by the Fairfax Group. And this is a good company where, we see upside in terms of numbers coming in and strong cash flows being generated over the next few quarters.
That's about Thomas Cook, right? You also like Axelia Solutions. This is a company that we don't often talk about. We know it's a technology provider to airline companies, so it's a direct play on the revival that we're seeing in travel and tourism over the last 12 months. Could you tell us a little bit more about it and what from here on? What are the triggers for Axelia?
Yeah, I think Axelia has, rallied quite sharply over the last couple of weeks. But having said that, there is consistent improvement in their operational numbers. This is actually a subsidiary of Axelia Group, which is an international company into the IT solutions for airlines as well as cargo services. The listed company in India only looks at the revenue assurance and revenue accounting side of the software application that they provide to airlines. And this business is highly profitable. They make margins in excess of 40%, and they provide, a dividend of more than 80% is paid out to investors. So it's one of those unique IT plays, which is going to derive its growth primarily because of, more travel. And as airlines improve revenues, you will see Axelia also report good numbers. The interesting part is Axelia reported positive profitability even during COVID. So I think they have a very resilient business model. So it's quite an interesting company that we've held on to.
Mithun, is it sort of, I don't know if you look at RateGain, but they're also a technology provider largely catering to the tourism sector, hotels, etc. And I mean, is it similar?
Prashant, I think that's a SaaS-based company, but it's still not very profitable. We did have a look at it, but I think Axelia, its erstwhile name was Axelia Kale, and earlier that Kale Consultants. I think this has a proven track record. They have over 75 global airlines as their clients. So I would not really, compare the two alike. I think RateGain may be more of a startup sort of a company which needs to really prove itself, while Axelia, I think, has done that over the years.
Okay, all right. Mithun, some of these metal stocks, for the last quarter, they've reported very, very weak numbers. The commodity cycle on the whole got into a bit of a soft phase. Now, quarter 3, there'll be some relief, though not to that extent. We are seeing a bounce because the China unlock is playing out. But on ground, still things are very skittish. What's your take on this space? If someone had these stocks, would you advise them to get out of it? Or do you believe that it's providing a bit of an opportunity?
I think, Nigel, I think a lot would depend on how, China and the US actually, in terms of their economy, do over the next few quarters. If we do perceive that, the rate hiking cycle in the US is through, and actually we will focus, and the Fed will focus more on growth than on inflation, you could see, again, some of these spaces like metals, which have been beaten down, do quite well. Because most of the Indian companies are well integrated. They also, through the COVID period, they made a lot of money, so they're quite deleveraged. So they do present an opportunity where there is value. And whenever the next cycle does turn, I think a lot of these companies will do well, be it the Tata Steels or the Hindalcos of the world.
Any thoughts on gold loan financing? I know it doesn't make it in your portfolio, as we can see it right now, but we're seeing very divergent moves. Today, Manappuram General Finance is up 7 to 8%. On the flip side, Muthoot Finance is down 6-7%. Have you looked at these stocks? Any thoughts on the Q2 numbers and what we're seeing right now and why there is such a disparate move?
I did look at the numbers from Manappuram. I think they reported quite strong numbers after 2-3 quarters of disappointment, and the stock is way off its highs, and primarily because their microfinance business, Ashirwad Microfinance, which was reporting losses, has turned around this quarter, and that has helped the overall profitability for Manappuram. I think the management is also talking about growing the AUM even on the gold finance side by about 5 to 10% going forward. So I think it's one of those value bets. I think annualized earnings would be in the order of 19 rupees, and the stock I think is around 115. So it's quite attractively priced. I think there's been some insider buying over the last couple of quarters as well. So something that one can look at and keep it on its radar.
All right, that's interesting. A lot of information there on Manappuram. Thanks very much, Mithun. We'll leave it there. Appreciate you joining in, and thank you for running us through all of that. Well, the markets dipped a little bit. We're down 20 points. So that's the degree of the move we've seen for the bulk of the day. 20 points here, there, but not beyond that. So we are entering the last, 20 minutes of trade. We'll take a quick break here. As always, we'll get you a check on what's happening in dealing rooms. A D Street chatter with Nimesh. And of course, technical BTST trade.
Welcome back. More or less flattish days what we're seeing on the index. In the last few minutes, though, we have seen the Nifty Bank move into the red and SBI has moved to the low point of the day. And now if you look at SBI's price, I think it's even lower than what we saw, in terms of the day it came out with its result reaction. So it's moved to the low point of the day, down close to around 1.5%. But it's a good time to tell you what's going on in dealing rooms. And let's get straight to D Street chatter. Nimesh joins. And Nimesh, what are you picking up this time around? Flows continue to be solid?
Flows are continuing to be solid, but they are quite muted today. That shows up in the overall markets as well. It's been a bit of consolidation, not much in terms of news flow as well. Even the flows are quite muted. The two sectors which stands out today clearly, Nigel, is cement and metals, and there are reasons for it. Cement, largely because most of the street do believe that the worst in terms of numbers is priced in now, and from here on you're going to see some bit of improvements as well. So that's why some bit of the cement space is well bid by the large institutions. I guess for metal, it's more of a China opening up play, and hence you're seeing a bit of move in the metal names as well. So these two sectors stand out. The other big thing is the mid-cap and small-cap for the last few days are relatively underperforming. So the breadth has become narrower and narrower, and what you're seeing is leadership only in few sectors and few stocks. So that's going to be the trend, I believe, towards the all-time high. So that's something which the dealers are talking about. But as I said, a day of consolidation, but the flows are quite muted. So not much participation coming in, both from the FIs as well as the DIs today.
But Nimesh will definitely be picking up plenty on individual stocks. So run through that list, 3-4 stocks that you have for us.
So, as you rightly said, there is a lot of action in the individual names. So the first stock is MedPlus. The entire, diagnostic stock hospital basket is doing good today, and MedPlus stands out on the back of some bit of action back in the HNI desk, and that's where the stock is up 10%. Interestingly, there was a Credit Suisse update as well today on the stock, and I've seen a big move in that stock. So that's the first one, MedPlus, on good, strong HNI flows. The second stock is NHPC. That stock is relatively under pressure today. The flows are mixed is what I understand, but I guess post quarter two, you're seeing some bit of profit booking in NHPC in today's trade. So that's the second one. The third stock is PB Fintech. That's been the big theme, the platform companies and the lockup shares opening up. So again, in today's trade, there was a large block deal, nearly 2% equity has changed hands. And I believe one of the leading long-only fund, and FI was a seller in today's block. So that supply pressure continues in PB Fintech. And the last stock is Paytm. Remember, the lock-in opens today, so there is a buzz of a very large block deal coming in Paytm very soon, and it's going to be at a deep discount as well. So that's the reason why Paytm should be in focus since the lock-up is opening, is getting over today. So maybe tomorrow or day after, we're going to see a large block in Paytm as well.
All right, that's an interesting list as always, Nimesh. Thank you very much for that. So as DC chatter, and you might want to pay attention to what Nimesh is saying with these individual names. Mitesh is joining us now to tell us what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, what do you have?
I have STBT on iSure Motors with a stop at about 35.40 for targets of 34.70. While Dixon is closing just near the swing high, ready for a breakout, it seems like. So there's a BTST with a stop at 45.70 for targets of 46.50.
Okay, thank you very much for that. Kunj Bansal of National Institute of Securities Markets is also joining us on the show now. Kunj, afternoon, and thanks so much for joining in. Any stock which looks attractive to you right now at these levels?
Yeah, so market has come at a typical level wherein on a year-on-year basis we are flat. But if we look at a 1.5 month basis, we are up 8-9%. So if at all market would, in my view, start to top out, so taking a call on stocks at this point of time would be difficult. But still, if we analyze the result season, which is now largely going to be over latest by tomorrow, barring a few. Within the auto and engineering ancillaries, company called Timken India gave its numbers. Numbers were in line with expectation. The top line did show a growth, but the EBITDA margin, gross margin, and resultantly EBITDA margin showed pressure because of the high raw material prices, which was on the expected lines. So just like the overall market and all other stocks, on the basis of such numbers, the stocks do show correction, and the same was the case with this company also. From a high of around 3,500, the stock I think has fallen to 2,700 odd rupees or so. But given the way the growth will come for the company from the railways to which it supplies, from the auto ancillary, auto OEMs to which it supplies, and from the engineering companies to which it supplies, I think the medium-term future for the company is good, and that's the space and the opportunity that can be there for the investors for medium-term in the market.
Okay, all right. Well, Kunj, what about Grasim? You know, look at the standalone numbers. That actually was a bit of a miss. But as we know, standalone counts for very little, you know, because you have the Ultratech business in there, which bulk of their SOTP comes in from there. Any view on Grasim, though? The stock is up close to around 2% odd now.
So historically, if we look at these holding company kind of companies or these structures, they don't really get rewarded by the market. So there are multiple ways market participants keep trying to value these stocks by sum of parts, by giving weightage to individual companies and then valuing them, and then trying to arrive at an aggregate valuation or whatever. But these stocks typically move when the markets are their highs, which in fact currently are for that matter. But as I said, they don't typically get right valuation, because market finds that if I have to play cement, I'll go to individual company, and like that individual businesses. So that's why I don't think that there is going to be a consistent outperformance from these kind of stocks for a medium-term investor to hold on. For short-term participants of the market, for traders, yes, based on their technical analysis, based on their strict stop-loss understanding, they can continue to participate. And they are the ones who will get opportunity in these kind of stocks.
Okay, all right. Kunj, just stay with us for the time being. Let's focus on Hindalco. Remember, they came out with the weakest set of numbers, but that was a little better than what the street was actually estimating. The copper business, that was a pleasant surprise. In fact, I caught up with Mr. Satish Pai, the managing director of the company, earlier today. He gave us a sense on how the Novelis business is shaping up, the cooling off in cost for the aluminium business, and a trend on the copper EBITDA as well. Let's hear him out.
Novelis, by the way, had a very decent Q2 at $506 million EBITDA. And they have said that, they could be facing headwinds of about $75 to $125 a ton in Q3 and Q4. Now, these headwinds are coming from inflationary costs. It's coming from the fact that LME and premiums are down, which is dragging their scrap benefit down. And it's coming from the fact that there are, energy uncertainties in Europe in particular. So it would be fair to say that probably Q3 and Q4 will help us shed some of these negative headwinds that we are seeing. And we still remain committed to our $525 per ton guidance that we give. single biggest thing that has impacted our cost of production is the availability and price of coal. So I think that, we have started to see post-monsoons, the coal availability and the pricing situation starting to ease. And we are cautiously saying that 2 to 5% reduction in cost of production will be seen in Q3.
Okay, all right. Kunj, what do you make of these numbers? Hindalco, the stock is bursting away, but that's not really on, on the numbers. Even valuation-wise, Jeffrey's note is pointing out that the stock is near 1 times price to book. Historically, it bases out at around 0.7, 0.8 times odd, or even lower. What's your take?
So for metal companies, clearly we have been seeing now pressure in the stock prices for almost 2 quarters plus. And obviously the reason for that, and historically, if we look at the pattern of the stock price movement of metal companies, metal sector stocks, they are more related to the individual metal prices globally that moves, and not as much to the recent financials. Recent financials, of course, can continue to come good based on whatever was the raw material costing that the company went in, and what is the average price it could get in domestic market and export market. For Hindalco per se, the Novelis also contributes somewhere in its business and as a result in its valuation. But as I was saying, that historically the metal stock prices move in tandem with the metal prices, and that is where we have clearly seen the metal prices peaking out some time back, about 5-6 months ago, and from there we are seeing a lot of correction in the commodities prices, which actually is very good for the metal user industries like automobiles, like refrigerators, like capital goods and things like that. So I think again it will be a short-term trade for the traders based on the technicals until the time we again see a sustained buoyancy in the commodity prices, which in my view is not there in the near future. I could be wrong. Again, for the medium-term investors, the investment may not yield much result as of now.
Kunj, do stay on. We need to slip into a very short break. We'll come back with more market talk as well as the closing levels. Well, there are so many individual movers in trade. Take on the gaining side, dredging is up 10.5%. JEC in India has rallied 10% on very large volumes. It's a fresh 52-week high on that. Fortis Healthcare, MedPlus in fact has actually come off from the high point of the day. Strides, the stock is turned around. There is a tax credit which is boosting the company's bottom line. Strides Pharma has gained close to about 10.5% in trade, nearly 11%. Look at the way the stock has spiked post the numbers. There is a one-time gain of 14.5 crore, plus there was some tax credit as well. But Strides Pharma is absolutely, running away.
What you mentioned, MedPlus is a sharp pullback. I mean, it was up 15% in the morning. I think it got to about 700 and it's closer to 600 now. That's a very sharp fall we've seen on MedPlus. Newland Laboratories, Rima, is another one. I think it came out with numbers from what, 1,500 rupees 2 or 3 days back. It's closer to 1950 now. So that's another 8% mover. Kim's, which is the hospital chain, that is seeing a very large move. I think we highlighted Repco, and Repco is up 10%. Action Construction is at a new high. So a lot of stocks which are moving around very sharply.
Right? Every time we talk about ITC and how ITC is at a fresh high, up 60%. Even Godfrey Phillips is matching step by step, up 5%, 6% today. Very strong numbers, 58% top line growth, 63% EBITDA jump, 70% jump in the profitability. Godfrey Phillips as well, in the way Mangalam likes to put it, smoking hot on Godfrey Phillips as well. We still have our experts with us, Kunj Bansal as well as Mitesh Thakkar. Mitesh, any thoughts on some of these mid-caps which are moving around with very sharp gains and large volumes?
I want to start with a disclaimer. I personally own Godfrey in my portfolio and have booked some profits. I think the big breakout for this stock happened at around levels of 1350, 1400, which was actually a 7-year kind of a consolidation breakout, because for 7 years the stock had never had a monthly closing above levels of 1320. So I think this stock has now gone into blue sky territory. I think the measuring targets are beyond 1950 to about 2300. And I think eventually the stock can go even higher because the indicator position is very, very positive. So I think it remains a buy on declines. Now is not the best price to enter. I think today also we have seen some profit booking happening from our levels of 1837, 1840. But if it comes to about 1600, 1575 zone, I think that will be a preferred entry zone. Otherwise, if somebody is holding out, just trail your stop loss to below 1550 and hold on to this one. The others I'm not tracking, unfortunately.
Okay, some more market opinion. We earlier in the day spoke with Prateek Gupta of Kotak Securities on the way forward for the market. Listen in.
India has really outperformed by a mile compared to other emerging markets this year. Just to put some numbers in perspective, India is up about 5-6% year to date, whereas China, for example, is down some 25-27%. The MSCI EM index is down about 25-26%. And we think we're getting to a point where valuations are really getting stretched. India is now, the Nifty is trading at about 19 times FY24 earnings, 17 times FY25 earnings. And the premium to MSCI EM is now gone up to 100%. So India has always traded at a premium, but this time around, it's gone way beyond the normal range of about 40 to 60%. In the short term, we think there is a risk that India sort of underperforms, and we even worry about the risk of more foreign outflows as people shift money away from India to China. China, you might be aware today, there were some measures about property sector stimulus and a little bit on the COVID reopening strategy over there. So if that continues and that starts gaining momentum, we could see some money shifting out, especially in the context of India being quite expensive. In the short term, there is a risk of a disorderly selling that can come about. If all the sellers who are locked up, they rush to sell the stock at the same time. But typically, in our experience, we've not seen that happen. Most of the sellers are not necessarily desperate sellers.
Okay, Prateek Gupta there with thoughts on the market, outlining the huge outperformance we've seen in India relative to other markets. Mitesh, thank you very much for joining us. And Kunj, it's always a pleasure having you with us here on the channel. There was a bit of a sort of sell-off towards close, so the Nifty will end lower. The Bank Nifty ends slightly in the red. And even the Nifty Mid-Cap Index, which actually was not doing badly, when we started at 230, that also will end lower. The Small Cap Index will end with about a 0.4, 0.5% kind of gain. Market breadth is in favor of declines. It was almost exactly 1:1 when we started, but the momentum there also slipped a bit. Now, the stocks, the sectors which were under pressure, two large names, FMCG and PSU banks, but nothing large. I mean, pullbacks to some degree. Metals, real estate and IT services stocks did better. If you want to look at the Nifty large cap gainers and losers, Hindalco, Apollo Hospitals and Tata Motors were the three top gainers. On the losing side, you had Dr. Reddy's, ITC and Coal India, which lost out. That's Dr. Reddy's, ITC and Coal India. But as we've been saying, I mean, I think the real action was in the broader markets, and so many of these stocks with gains of between 5 and 15%. Rima.
We spoke about so many of the gainers, so let me quickly run our viewers through the losers today. Sun TV down 9%, revenues were a miss, down 32%, and even the ad revenue growth for Sun TV trailed Zee Entertainment. So Sun TV's ad revenues were up 1.1% on a quarter-on-quarter basis, while for Zee Entertainment, it was up 3.7%. Zee also, by the way, was under pressure, down 2.5%. BHEL, which reported an EBITDA loss, declined. Trident, weak numbers. Campus Footwear has been losing ground for the last couple of days since its numbers, down 30% in the last 1 month. Bharat Forge, margin miss. The stock declined in trade. And Zomato, too, has given up some of the gains from last week. Nigel?
Well, that's right, Rima. It was that sort of a day, right? The Nifty, the final tick actually is closer to the low point of the day, 18,300. But as we've been saying, it's par for the course. The mid-cap index is going to end as flat as can be. However, by the time we wound up, well, more number of stocks were declining than advancing. We had 1,600 stocks on the NSE that were lower in comparison to around 1,300 stocks that were advancing in trade. The Nifty Bank as well started with a lot of promise, holding on to that 42,000 odd mark on a closing basis, but did come off substantially from the high point of the day. Some consolidation seen, well, pretty much okay for the bulls. For the time being, though, we'll have to wrap up on this edition of Closing Bell, but you don't go anywhere. Mr. Ramesh Thamani is back with us today on the Wizards of the Wall Street. Catch the market veteran's journey and inspiration behind his success on our special show On the Other Side. You don't want to miss this for sure.